Hey guys, welcome back to my channel. In this video, I will be showing you guys my trades from 13th of August 2021. That was a Friday. Unfortunately, I had a big red day on this day, but it could have been really worse. I will give you guys an example of how my trading was not that bad, but the result was really bad. This is the reason day trading can be so hard sometimes, because you can take the best trades in the world, but you can still end up being red. On this day, within the first 5 minutes, I was down 4,500 US dollars. Within the first 5 minutes, I took a small break. I came in with a fresh mindset. I dealt with my emotions properly, and I was able to control my losses and end the day with $1,800 in the red. Let's take a look at the stocks I was watching for the day. I post my daily game plan on our Discord group, including webinars, upcoming week webinars, educational webinars. So if you guys want to be part of our Discord group, the link will be in the description box below. The first stock I was watching for the day is Tesla, because Tesla broke out of this triangle on Thursday with high volume. You can see that the volume increased on the 1 hour chart on Thursday. I was looking for a continuation move towards the upside on Friday, because this is a strategy from my playbook. It was looking really nice after the break of a triangle. This was a bull pennant strategy on the 1 day and the 1 hour chart. So I was liking it towards the upside for the break of 725, which was again around the pre-market high on Friday. The next level will be 727, which was around the high of this day, followed by 730, and my ultimate profit target on Tesla, if it starts moving, was $740 for the day. The second stock I was watching for the day is mRNA. This is opposite to Tesla. Tesla I was liking towards the upside because it was making a bull pennant strategy towards the upside, but mRNA was making a bear pennant strategy towards the downside. But in the pre-market, mRNA had a news that their third dose of booster vaccine was approved. That's why I removed mRNA from my watch list, because the pattern is showing that it can go towards the downside, but it had strong news. So it gapped up in the pre-market itself, and it made a high of 405 around in the pre-market. That's why I was not keen on trading mRNA for the day. The third stock I was watching is Apple, because Apple broke out of this bull pennant strategy again. This is a similar pattern, bullish move towards the upside. It's been consolidating for the past 2-3 weeks, and now it broke out of this triangle that it's been making for the past 2-3 weeks on Thursday itself with high volume. I was looking for a continuation towards the upside if it breaks the $150 or $149 towards the upside. 150 is the all-time high on Apple, and it's a very good psychological level as well. So my plan was that if it breaks 149 or 150 towards the upside, that can give us a good opportunity for day trading Apple. The last stock I was watching for the day is Roku, because Roku is looking good for the downside on the 1 day chart. It made a bearish move towards the downside. It made this edge pattern. It was making this edge pattern on the 1 day chart, and it fell down to $360 level. 360 was a good resistance on Roku that is now acting as support. So my play was that if the market drops, I can trade Roku for the break of $360 level with the profit target of $355 or $350 level. That are the good psychological levels on Roku. Let's break down my trades for the day. I took 6 trades in total. I will show you guys my trades manually instead of showing the recording, because the recording will be 20 minutes long. At the end, I will give you guys my review, what I think about my day overall and what I will be doing moving forward. My first trade on Tesla was for the break of pre-market high. This dotted line is the pre-market high, which is around $726 level. I got filled 10 contracts at a premium price of 13.65. This was a Friday, so I wasn't trading the same week contract. These were 730 calls. The following week, 20th of August calls. And the reason is because this is a setup from my playbook. I'm liking it towards the upside, so I want to hold on to my winners. If I'm trading the same day contracts and the same week 0 day to expiry contracts, I don't feel confident holding on to my winners, because those contracts drop a lot if the stock gives a pullback. That's why my plan was to go next week contracts, because my profit target is 740. So if it moves in my favor, I can take a few partials, but my plan was to hold on to maybe 50% of my position for a bigger move towards the upside. As you guys can see, as soon as I entered, we saw this huge wick on the 1 minute chart, and when it failed to hold the 9 EMA and $722 level towards the downside, I covered all my contracts with a premium price of 12.06, overall losing $1,600 on this trade. Let's now break down my second trade of Tesla. This is by far my worst trade of the day, and after this trade, because of my psychological mess up, I decided to take a 5 minutes break. I came back, and then I was able to control my losses losses with a fresh mindset, and I was able to control my emotions. On my second trade, I got filled for the break of pre-market high at a premium price of 14.15, and then when I saw that it's not holding towards the upside, I should have covered my losses at the break of 724 or 723 towards the downside, but my emotions got the best of me on this trade. I held on to my loser for 2 or 3 minutes, but when it made a new low of the day, I made sure to get out of my position because this can even go to $7-10. I don't want to be part of that. I covered my contracts at a premium price of 11.33, overall losing around $3,000 on this trade. As you guys can clearly see that I held on to my loser a bit longer on my second trade. That is unlike me. If I'm trading Tesla, I only give it maybe 50 cents or $1 to go against me, but it happened so fast right at the open. I held on to my loser more than I should have. My emotions got the best of me and I was red $4,500 within the first 5 minutes of market open. But the good thing I did is that after realizing that I'm taking emotional trades, I took a 2 to 3 minutes break. I went out of my trading office. I had a glass of water. I came back and then I was watching Tesla again. Now comes my third trade for the day. After being down $4,500 within the first 5 minutes of market open, I decided to size down. I only gave myself $500 more to look for good opportunities and see if I can cover my losses a bit. I accepted that this will be a red day for me. The best thing I can do is size down, look for good opportunities. If I can see good opportunities, I will be able to capitalize on those trades. And eventually, if I can end the day with being small red instead of being $4,500 red, that will still be a good day. After taking a quick break, I came back to my trading setup. I was looking at the price action of Tesla because it was making this triangle on the 1 minute chart. What we now need to focus on is the volume. That's what I was looking at. We can see that the volume nearly died down on these candles. That means all the traders, there's not a lot of volume being done here. So most of the traders are waiting on the sidelines. They are waiting for Tesla to give a push towards the upside or towards the downside to take their trades. When I saw that it's breaking this triangle towards the upside, I saw that the time and sale speed is increasing. I entered 5 contracts at the break of this VWAP. This blue line is the VWAP. I got filled at a premium price of 13.38, again trading 730 calls next week contracts. Coming to taking profits on this trade, at the break of 729, before the break of 730, I was expecting some kind of resistance at 730. That's why I covered 5 contracts at a premium price of 16.37. On the pullback to the 9 EMA, I was expecting Tesla to make a red candle on the 5 minute chart and continue towards the upside. That's why to lower my risk, I entered on the pullback. I entered 5 more contracts at a premium price of 15.40. You guys can see that the flag worked in my favor. It moved towards the upside with high volume. But once it broke out of the flag, I saw a lot of red on the time and sale. Sellers were taking control. So I realized that this is a fake out. This is again a thumbs up in my opinion because I was able to keep my emotions aside. I was able to see that that is a fake out. I covered my whole position at a premium price of 15.05 because if I would have held this position for even 10 or 20 more seconds, this would have been a huge loser for the day. Overall, on this trade, I was able to make $1,700. So you guys can see that this was a good trade. If I would have sized up, if I would have taken maybe 10 or 15 contracts at the break of 724 towards the upside at the break of the VWAP, I would have most likely been green for the day. But was I willing to accept the risk? Because I was already down $4,500. If I take 15 more contracts, I can easily lose $2,000 to $3,000 more on that trade. Was I willing to accept to go $7,000 red for the day? The answer was no. So my only plan, my only strategy is to lower my position sizing and add on to my winner if I see it going in my favor. My next trade of the day was on UPST. I wasn't watching UPST on my primary watch list, but a trader in our Discord chat, he called it out that UPST is moving really nicely. It's breaking all-time highs. That's why I was watching UPST for the upside. I started watching it right around here, but if I'm looking at a new stock that is not in my watch list, I like to look at the price action first before taking any trades. I was liking UPST because it made this flag pattern on the 1 minute chart. If you look at the 5 minutes chart, it made these 2 red candles on low volume. It pulled back to the 9 EMA on the 5 minutes chart. That's why at the break of the flag, I took 10 contracts. I got filled at a premium price of 8.30. On this trade as well, I took 200 calls next week contracts. I wasn't willing to increase my risk on the same day expiry contracts because those contracts can be really volatile and I was already red for the day. So just playing it safe here. On this trade, I knew that I got a really good entry before the break of the flag, so I waited for the break of high of the day. At the break of high of the day, I covered 5 contracts at a premium price of 9.10, but when it failed to continue towards the upside after this red candle on the 1 minute chart, I covered the rest of my position, overall making $822 on this trade. My last 2 trades of the day were on Tesla. I realized that on the price action of Tesla, it faked a lot of people out here, people who took it long and people who took it at the low of the day will most likely exit this position if it breaks the low of the day. Before the break of the low of the day, it was making this flag pattern. It made a bearish move towards the downside. It was making this flag on the 1 minute chart. At the break of the flag on this green candle, I got in 10 contracts at a premium price of 15.11. But as soon as I entered, I saw a lot of green on the time and sales. So just to avoid a big fake out, I covered my position at a premium price of 14.70, losing $410 on this trade. After covering my position on my last trade, I realized that I got faked out on this one because this big green candle was on really low volume. Usually if it's a fake out, we see increase in volume. For example, this was a fake out. We see increase in volume. That means sellers are stepping up. On this trade, if buyers wanted to step up, we should have seen increase in volume. But because the volume was really low on this one, I just realized that the trade idea is still intact. I got faked out, but if it breaks the flag, we might see some stop losses get triggered and that can be a good short opportunity for me. On my last trade on Tesla, I just waited for a confirmation for the break of the flag. When I saw that the flag is breaking, I see a lot of red on the time and sales. The speed is increasing. I entered 10 contracts at a premium price of 15.30. I'm trading 720 puts, next week contracts. None of my trades on this day were the same day expiry contracts. At the break of the low of the day, I can see that a lot of stop losses are getting triggered. We saw increase in volume. When it broke the low of the day at 718, I covered 5 contracts at a premium price of 15.86. When it broke $718 level, I was not looking at a lot of red on the time and sales. Buyers were trying to hold that level. And if you look at the bigger picture of Tesla, it's still in a healthy uptrend. So when I entered this trade, I knew that this is going to be a quick scalp. This is not a trade to hold on to because on the 1 hour chart and the 1 day chart, it's still in a healthy uptrend. After taking my 7 contracts out, you guys know that if I take a partial on a position, I don't let the contracts go negative on me. When I saw that the premiums are coming back to my entry point, my entry was at 15.30. I made sure to cover the rest of my position at a premium price of 15.49, overall making $500 on this trade. That's it guys. Overall on this day, I took 6 trades, 3 were winners, 3 were losers, ending the day with $1,800 in the red. You guys can see that within my first 2 trades and within the first 5 minutes of market open, I was down $4,500 for the day. My first trade was still not that bad. I accepted the loss, but my second trade was really bad. I was trading out of my emotions. I was able to realize that. The good thing I did is that I took a small break. I came back to my trading setup and then I was able to take good trades with small size moving forward. In theory, if I would have increased my size on my third trade on Tesla or the UPST trades because those trades were really good, if I would have increased my size on those trades, I would have most likely been small green for the day. But that's not a good habit to have if you are a day trader. You should never increase your size when you are red for the day because every trade is a risk to reward. If you are increasing your size, are you willing to accept the increased risk because you can go in a deeper hole than you are already in? That's it guys. Hopefully you guys can take a thing or two, learn from my mistakes and see what I do when I'm big red for the day. If you like this video, give this video a thumbs up and subscribe to my channel for a lot more content on day trading. If you don't follow me on Instagram, make sure to follow me there because I post a lot of good day trading content on Instagram as well. Thank you for watching and I will see you guys in the next video.